All right, so let's jump in, and some folks will be joining over the next few minutes. Welcome, everybody. We have a record turnout of 274 people that have registered. Hopefully, we'll get 275 that actually show up today. But not to worry, this is recorded and purposeful, so we can send it around later. But welcome to Orr Group Talks. So Orr Group Talks is a thought leadership series where we bring together thought leaders and to talk about specific topics that are top of mind. And today we're going to be talking about the economy and the job market, both of which seem to be in top of mind for many of our friends, peers, colleagues in this moment. Just a little housekeeping before we jump in. So we're going to be talking to our guests for the next 40 minutes, and then we're going to go into Q&A for the next 20. So my colleague behind the scenes there is collecting all of your questions. So if you send one, she will organize them all, and then we'll jump into them later in the session. Also, one other piece of housekeeping: this is being recorded. So Shaby, Carter, keep it PG, no curse words. Sure, say your kids will watch one day. Today we're going to be talking on my bottom left. I have Carter McClelland. And then my top right, I have Shaby Rosales. We're going to be talking about this bear market that we're in right now and how nonprofit leaders can plan through this economic uncertainty. I'm sure people have been reading the news and seeing it at the gas pumps. Inflation is everywhere. The Fed seems to be raising the rates every other day. Market seems to be going quite the opposite. There's a war in Ukraine. I mean, you name it. This is every day. There's a new headline. The list is going on and on. Well, what you might not see on CNN or your top news outlets is, okay, well, that is all happening. What's the impact on the nonprofit sector? And how does that affect everyone on this phone? So today we're going to be hoping to bridge that gap. The most common questions that we've been hearing from our colleagues, clients, friends is, how does this economic outlook impact my organization, my donors, and my staff? And we're here today to answer those questions and more. So I'm CJ Orr with the Orr Group. Those aren't familiar with our work. Our firm has been nonprofits for over 35 years. We work with around 100 or so different nonprofits around the United States and globally. Our services include strategy, fundraising, campaigns, leadership, recruiting, etc. However, you did not come here to hear me talk about Orr Group. So I'm going to be quiet and turn it over to my friends. So what I'd love to ask from both Shaby and Carter is just for them to quickly introduce themselves, and we'll get into the panel. Shaby, you're on my top right. May I call on you first?
Sure thing. Hi, all. Glad to be back. My name is Shaby Rosales, and I am the Chief Human Resources Officer here at Orr Group. I am currently managing our talent practice area, which includes recruitment services, as well as outsourced HR support and DEI, among a host of other things. I've been working with the firm for, the past 6 years, and have been in the HR space for nearly 20 at this point. I am really looking forward to the discussion today. I think it should be a good one. So thank you. Thanks for having me.
Thank you, Shaby. Carter?
Thank you, CJ, and thanks for involving me today. So my day job is as founder and chairman of a company called Union Square Advisors, which is about a 45-person boutique that does technology mergers and acquisitions work. I'm a native Californian, Stanford engineering undergraduate, and have a business school MBA from Stanford. And my entire working life has been on Wall Street. I was at Morgan Stanley for 22 years. I was at Deutsche Bank and Bank of America for a decade between the two of them, and I started Union Square in 2007. My philanthropic journey has been largely focused until the last decade or so on Stanford, where I'm very active, and also Juilliard, where my wife Stephanie is on the board. She produces Broadway shows and has been a board member at Juilliard, I think, for about 20 years. And I also spent about a decade on the board of the United Way of New York City. I chaired that board for about 3 years. I was introduced to Cheryl Dorsey at Echoing Green in 2014. I fell in love with the organization and its mission, and have served on that board since that time. and have been co-chair on the board along with Marie Kelly since 2019. And so today, while Echoing Green is my dominant philanthropic interest in terms of both time and treasure, I also serve on the board of an entity called Stanford PACS, PACS, that stands for Philanthropy and Civil Society, which is an entity housed at Stanford that does exactly what its title says, really helps the world understand and participate in philanthropic endeavors. And finally, I'm well along in helping create a program at Stanford's Business School for BIPOC MBA candidates who aspire to be social entrepreneurs upon graduation. So back to you, CJ.
Excellent. Great introduction, and thank you for that. While you have the mic, I might start with you. I kind of wanted to pick your brain and pick into your Union Square's advisors, Morgan Stanley, Deutsche Bank, Bank of America experience. So you're very familiar with financial markets. I'd love just a 30,000 foot overview of what you think has happened maybe over the past 2 years, and then particularly the past 6 months, like from January 1 on, just love a 30,000 foot view of what you think has been going on.
Yeah, sure, CJ. So let me actually, if I could, start at 50,000 feet for just 60 seconds and say that I taught a class at Stanford a couple of years ago on how many financial crises have there been over the last 50 years. It turns out there have been 12. So that means about every 4 years, something comes along that creates economic stress and financial market turmoil, and that we all have to make our way through. And I'd say what we're going through now is likely to be pretty much middle of the pack as those 12 financial crises have gone. And as we go through this, I'll try and elaborate on why I think that's the case. So let's turn to what's happened since the onset of COVID. And as a reminder, in 2008 and 9, there was a financial crisis, which was marked actually by a near meltdown of the banking system. You all recall the government injecting vast amounts of capital into the banking system. Consumers and businesses were starved for capital. Unemployment rose to quite a high level, and inflation plummeted to near zero. And it took the better part of a decade to kind of straighten that all out. This time is completely different, in my opinion. When COVID hit, the government and the Federal Reserve basically learned the lessons of the last crisis and flooded the market with liquidity. So you've all read about all these things, but individual savings through all the stimulus and Fed relaxation has raised savings in the U.S. economy to literally $4 trillion today. And almost all of that is still there. In other words, it hasn't been really spent very much. And as we went through COVID, a kind of two-tier economy developed. You've probably heard references to the so-called the K economy, one leg going up and to the right, and the other going down and to the right. So things that did not require a lot of human interface went up and to the right. So many kind of business-to-business, e-commerce, things that could be used in the home. Those pieces of the economy really powered right through it, largely unfazed. And then the pieces of the economy that did involve human interaction, so travel, vacations, restaurants, theater, went sharply down and to the right. And businesses, as they always do when something like this comes along, responded to the onset of COVID by doing their best job of figuring out how to right-size their businesses for what they saw in front of them. So employment stayed pretty strong in the up and to the right parts of the economy, and employment plummeted down to the right in into the human interface parts of the economy. So to finally get to CJ's direct question, what's happened over the last 6 months? Well, it's an interesting gathering of pluses and minuses, I think. Employment has steadily improved, including right through June, or at least May, and unemployment is now higher than it was at any time in the economy's history, and higher than it was at the outset of COVID. Consumers are anxious to get COVID behind them and get things back to normal, and so they've stepped on the gas and started to spend more significantly. And businesses simply haven't been able to keep up. They cut back so much, they're not able to get things back up and running. You've all read about supply chain difficulties. It's resulting in a lot of shortages. I think this is all exacerbated by how China is managing COVID outbreaks. And we're also in this rather interesting situation, which I'm sure Shaby will elaborate on, where we have 11 million available jobs and only 5 million people looking for a job. If the people were available to fill those jobs, actually unemployment would be at an all-time high and way above what it was at its previous peak before the pandemic hit. And then certainly the war in Ukraine has exacerbated the situation by rapidly raising energy and food prices. So this is a perfect storm for driving inflation. And all this inflation, once again, as you've read about, is the worst we've experienced in 40 years. And for those in the bottom half of the economy, it's really it's stressing everybody, but it's stressing them to the point that they're scrambling to stay afloat, particularly when food and gasoline become as expensive as they are. But we're still sitting here today with most of that $4 trillion in savings still stashed away. So let me stop there, Shaby. Maybe you want to pick up on the labor side of things.
Sure, yeah. I think what's interesting, if we think about the last 6 months or so, I think this is the most volatile that we've seen, right? We started the year at the tail end of the Great Resignation, and shameless plug, I wrote an article about it. You should go check it out on our website. But essentially, we started out the year with folks still leaving their jobs in droves. They didn't necessarily land anywhere specifically at first. They were just walking away from the tumult of their day to day. Then we moved into what was later coined the Great Reshuffling. And this is the phenomenon not of people just walking away from their jobs or career, but rather walking towards or into something new. And we saw an influx of movement in the market, and the jobs and labor reports, and Carter, as you mentioned, were coming out of the Bureau were phenomenal. And now we found ourselves in a very tight labor market. There are not enough people for all the jobs that we have to go around. There are 2 jobs for every person, as you just mentioned. People have just recently landed somewhere, and they're not looking for another new thing. They want stability. They want to amass quick wins where they are, and they want to feel the impact of the work that they're doing. And so the labor market now at this moment has gotten very tight. It is a very competitive market for employers to find new talent.
Thank you both. So we learned a little bit about what happened previously. Carter, thanks for kind of walking us through, inflation, the war in Ukraine, just all of the other kind of factors that have come into play. That being said, you mentioned where the economy has $4 trillion unspent. What's your vision? What you think is going to happen down the line over the next 6 months?
Sure. Well, first of all, as we all know, the Fed is working very hard to slow down demand through their principal policy tool, which is raising interest rates. But my belief is some of this is already happening without a huge amount of help from the Fed. So demand is starting to drop in a lot of different parts of the economy. I read that gasoline consumption in the United States in June was down 9% from June of 2021. Mortgage rates, which you all know have doubled to over 5% this year, are now back down a little bit below 5%. So, and I think that's coincident with people kind of pulling back from the aggressive stance they had around housing. And I think you're starting to see housing prices plateauing. And even commodities. I know I don't, probably very few of you watch the commodities market, but things like food, certainly steel, copper, are indicators of how active construction and other activities are occurring. And they're good leading indicators. And those prices are all down substantially over the last 2 or 3 months. And then the headline items around auto sales, other big ticket items are also trending down. And you take that with what Shaby said earlier about 2 jobs available for every person potentially looking for a job, and this huge amount of savings that's around, that I think it's, in my opinion, 2 things. One, I think it's very unlikely that this spins down and causes unemployment hardship. And what I mean by that is that the economy gets to a point where people can't find a job if they want to. There'll certainly be economic hardship in the bottom part of the economy, as I said earlier, because there's just not enough money to go around in certain segments of the economy. But I do think the Fed gets the job done more quickly than people generally think. I think interest rates probably peak at a lower rate than people have heretofore thought they might. And that even sometime in the fourth quarter, potentially, or if not the fourth quarter, in the early part of next year, it's very clear in the markets and the economy that things are kind of bottoming out, that inflation is trending down, and that we've kind of reached a plateau is the right word for a bottom, a level at which, you know, people can kind of make decisions about what the future may look like. So in summary, I think it will technically perhaps be a recession, but it'll be a very mild one, and with demand cooling without significant unemployment hardship.
Really helpful. Thank you, Carter. Shaby, I asked you the same question. What do you think is down the line for the job market?
Yeah, I mean, I think that, you know, when I think about like the labor market and how that's impacted by economic changes, I think that we're already starting to see it, right? Tons of reports are coming out about big tech giants and retailers laying off their staff en masse. They were quick, I think, to scoop up talent during the pandemic, right? Touting things like remote work, great benefits, et cetera, high salary potential. But they're feeling the effects of inflation as we all are. And nonprofits aren't immune to that, to the after effects of that either. Far from it, in fact. And so I would say that there will be a direct correlation to movement in the workforce and what we're beginning to see or beginning to get the slight whiff of in terms of this downturn, as Carter was just talking about.
Thank you. Carter, maybe just one other question. You know, you were talking about how commodity prices are going down, housing prices are plateauing a little bit. What are the biggest drivers of inflation? Is that energy? Is that housing? Is it the labor market? And then is your anticipation, you know, the Fed has said the goal is to get inflation 2% by end of year. Do you think they're going to achieve that? Just be curious your thoughts.
Yeah, okay. Well, in reverse order, I don't think they're going to get to 2% by the end of the year. As I read it, and I'm not an economist, so I just kind of know what I read, but I think most of inflation has been driven by food and energy costs and the cost of housing. And as I said, you know, energy consumption is going down, oil prices are going down, housing prices are plateauing. I think I read food prices are, if not plateauing, starting back down. And they're, I think, about half the CPI, right? So the other half of the CPI hasn't been under as much pressure. It's probably more in the 3 to 4% zone. And so I think that will be the new interim normal. That, you know, sometime in the next 6 months or so, you'll see inflation back more in that zip code, and then the Fed will have to decide, you know, how they feel about getting it from there to their stated goal of 2%. But I think at 3 or 4%, we're back in a world that will cause a lot less stress in all segments of the economy, you know, consumers, businesses around investment and things like that.
Thank you. So Carter, while you have the mic, I'm going to ask you your next question. So a lot of folks on our call are leading nonprofits or board members of nonprofits or work for nonprofits. So what advice would you have to maybe an executive director or board member who's starting to see maybe some slowdowns of their organization as kind of effect of the economy? You know, what kind of advice would you have to folks that are trying to make business decisions during this time?
Yeah, I said to CJ as we were talking about what we would be talking about today, is that this question is probably the most intimidating because I'm talking to a whole bunch of not-for-profit leaders who know much more about this topic than I do. So I'll give you my perspective from maybe two perches that I kind of see a lot going on. And let me start just because it's a little more macro with Stanford PACS. I think the issues that have come to the forefront in the world, just even recently around the Supreme Court's decision on Roe v. Wade, gun violence, and add to that, you know, the continual assault on democracy, climate change, has really heightened from every lens I look through the Stanford PACS lens, which is a big, their users, if you will, are a big pool of philanthropists, many of whom live within a 30-minute drive of the Stanford campus, that they're just much more focused and much heightened awareness and much more interest in deploying philanthropic dollars into the issues they think are important. Maybe one of those, maybe something else. The other thing I've noticed, and this is maybe a little more California oriented, but I think it's generally true, is the younger the philanthropist, the more interested they seem to be in doing something that they can also give their time and energy to helping be successful. In other words, they want to put their shoulder to the wheel in addition to supporting philanthropies financially. So I think those are just two things that I would say are kind of in the macro climate. In the equity green world, I think the most stark observation Marie Kelly and I as co-chairs have is that we took on the role of co-chairs at Equity Green on July 1st of 2019. And as many on our board have heard us say, on July 1st of 2019, the world looked pretty normal to us. And we were basically stepping into two very successful co-chairs who had preceded us and attempting not to mess it up. And that playbook seemed to work pretty well until 8 months later, COVID hit. And then our experience was our donor community really, came to the fore. Some remained very supportive. Others signaled their priorities were shifting a little bit. And so we had to shift our access and how we presented ourselves to reflect a less friendly environment, if you will, for what we do in our fundraising that we were experiencing before COVID hit. And then 3 months later, George Floyd was murdered, and the tables completely turned around for us. I mean, as an institution that has spent 33 years creating basically proximate leaders for communities to go back and do social work in those communities, particularly the BIPOC world that is an important part of that. We became someplace that got a lot of attention and interest, and we turned right back to that issue kind of 2 or 3 weeks after George Floyd was murdered, and launched a $50 million racial equity fund to scale our work. We raised it in 10 months, and we attracted a lot of interest from people that wanted to be involved in the issue of racial equity in the United States. So that's a personal experience of what we saw, but I guess the message I'm trying to deliver is your environment really defines how you need to present yourself, and you need to always be focused on, what is our message and story, and what is the community or support community to whom that resonates, and make sure you're really focused on that world to support your activities.
Really helpful, thank you. Shaby, same question, but a little bit different of a twist. We think the job market's going to be strong and going forward, and one of the probably the more common question that we receive, I'm sure you receive, is about employee intention, keeping talent, attracting talent. What can some organizations be doing, or what kind of ideas would you have for organizations on employee retention?
Sure, yeah. I think employers need to pay special attention to how they're positioning the opportunities that they have available. And this can be with regards to upward mobility. It can be further investment in professional development. It can be a seat at the table, right? What we know about the workforce, and especially the nonprofit workforce, is that people want to feel connection to mission. They want some direct line of sight to the impact of their work. And they want to feel valued, right? Like this one, and that I think transcends across all industries. They want to feel valued by their employer. We think in terms of value a lot. The employee-employer relationship is often structured, I think it's like a quid pro quo, where you get paid wages in direct exchange for labor or for work. But that's really an archaic way of thinking about it. The modern, sophisticated employee wants more, and they're demanding it. And we're seeing that every single day. They want work-life balance. They want better benefits. They want to make sure that the energy that they're exerting is matched by what they're getting back from their jobs. And as nonprofit leaders, we set the tone. We bear the ultimate responsibility, and it's up to us, I think, to set the course if it's off kilter or not going in the right direction. So it's really about being attuned to what your people want, and figuring out a way to get that for them.
Are there any specific benefits that you've been hearing have been important to this new way of work?
Oh yeah, definitely. So firstly, thinking a lot about remote work, I know that the start of the pandemic showed a lot of organizations and a lot of workers that they can be just as effective in their work from anywhere, not necessarily tethered to an office. But we saw the ramifications of that too, right? I mean, we lost connectivity. There was a lot of impact on culture for a lot of organizations that relied really heavily on interpersonal connection. So remote work or having some flexibility or fluidity as a benefit, having additive benefits for mental health and wellness specifically, and making a point to mention that, having added benefits for not just like time off necessarily, but on dedicated time off for specific things. So we've seen an increase recently in sabbatical leave. We've seen an increase recently on specific sick leave, means to us as organizations. And then what we're also seeing is response to sort of like the societal impact of a lot of the work that we're in. And so what that might mean is time off for like civic engagement. It might mean time off for activism. It might mean time off for different things of being involved in one's community. And there is a more holistic sort of people approach or human-centered approach to the work that we're seeing now in this space of benefits that are being offered.
Very good, thank you. Okay, so my next question, Carter, I'd love to kind of get a different perspective. We have a lot of fundraisers on the call. We work with many of them, and they're out and about working with donors like yourself and saying, hey, would love for you to renew your gift or contribute again to our organization. Is there anything you recommend that our fundraisers have in mind prior to those conversations with someone like yourself or another type of donor?
So good question. I smiled when you said donors like yourself, because I think when, I'll say this just the right way, but when I joined the Echo and Green board, I think Cheryl and her management team said, aha, somebody from Wall Street, they can be good fundraisers for us. And I would have to say that, I think the magic of any fundraising activity is it's a lot easier if you're fundraising for something you love and believe in. A good product really sells itself. So I would answer from that perspective. I mean, I've been very actively involved, in helping with the evolution of Echo Green, but truly actively involved in helping build a client base of donors that will support it. And that's where I'd start. Donors are clients, they're not the users of your service. They're not the ones who really benefit from why you exist and what your work is to make the world a better place, but they provide you with the fuel to keep doing what you're doing and grow. So the outreach to them, the how you tell your story, the how you assess what is of interest to them, and whether you have anything you're doing that might match up to what they're interested in, is key to kind of assessing whether it's worth spending time developing them. And then when you do develop them, obviously critical to keep them close to you, because they support you because they believe in what you do, and you make the cut in terms of issues that are important to them, and it's important enough for them to support you financially. I guess as I think about it, it's really, I guess I'd say it's relevance and communication in a world of increased competition. I guess that's the nutshell of what we're trying to do. And for us in the Echo and Green context, having established that as a very strong kind of core support group in the post-George Floyd environment, it's given us the confidence to move into another area, which is really follow-on funding for our fellows once they have finished their 2-year fellowship. And we've stood up a new business unit and are out trying to raise a similar amount of funding to really support our fellows once they're off the fellowship, to grow and attract other funding to their enterprises.
Yeah, I love that quote. Relevant communications in an increased competitive world. Really helpful. And I think also what you're talking about there is innovation, right? So for Echoing Green's example, they've never done anything like this before. So they have their traditional flagship programming, their fellowship programming, and their corporate engagement program. But what you're talking about is something new. And so they are innovating and thinking differently on how to communicate and attract and build something that will be of interest to donors and investors alike. And so I think it just points to the power of innovation in order to be front and center with philanthropy. Okay, Shaby, you were going to say something, but I interrupted.
No, that was great.
Okay, all right. Shaby, question for you. A lot of the folks are on calls are leaders at the organizations. Do you have any recommendations on what leaders should be doing just generally during this time? Any advice for leaders during this time?
I think communication is key. When you are a leader of any nonprofit or any organization, frankly, and you have a workforce that's looking to you for the answers, you need to be able to instill and engender trust and confidence. And so communication, I think, is key to that. Talk openly, honestly, and frequently about your plans and your strategies. Do what you can to bring folks along for the ride, right? I mean, trust is born out of authenticity and integrity. It's not enough just to walk the walk. You have to share transparently about what path you're planning to go down in the first place. And this, I think, can be really challenging when you're in a leadership role, especially amid uncertain times ahead. We saw this at the beginning of the pandemic. We've seen this many times before that, and we're seeing it again now. When you're in this seat, you want to be able to have all the answers. And the reality is, sometimes we don't, right? And I think that trust and communication and instilling confidence in your team is that intersection when you're able to authentically share and humbly receive. We don't have all the answers, and we may not, but the collective sort of power among us of everyone around the table, everyone sharing, if you share with your team what's going on, chances are they may have a good idea also that they can share in return. And so there is power and enormous benefit able to be transparent and open and communicate with your team.
Well, thank you.
DJ, can I add a thought to that? So look, I agree with everything Shaby said, and I would just add that, I think institutional distrust is at an all-time high. And particularly, big national, the government, the houses of Congress, president, et cetera. And I think it's not only is it kind of truth and trust, it is they're not delivering anything. So it's the fact that there's so much gridlock or so much institutional arthritis that people are just kind of giving up on those institutions' ability to provide value. So I think as a not-for-profit, it's really, really important you define what you're going to do, and then keep people updated on their progress against what you told them you were going to do. I think that's how you keep people kind of in the seat. And it's a breath of fresh air, I tell you, when you can deliver on that and people go, oh yeah, here's what I got involved in this organization for, and they did exactly or exceeded or did exactly what they told me they were going to do.
Right. I love that, especially because as leaders, we often find ourselves in situations where we say, I wish that they would have either kept me abreast of what they were working on or told me if they hit a roadblock or some barrier and I could have helped them. That goes both ways. That coin flips on both sides, right? So similarly, your team or your staff is looking to you to say, I wish you would have just said something, right? If we were not headed in the right direction, I wish you would have said something, and we could have either recalibrated our own thinking or helped in some other kind of way. And so I think that's exactly right.
Yep. We saw a lot of leadership during COVID around just staying calm, taking it one day at a time, and just calm, cool, collected, communication. You guys touched on all of that. I presume you have the same advice now, right? That type of attitude and approach to this seems very similar.
Yeah, absolutely.
Well,
Heidi, do you want to go first?
No, go ahead. If you have something to say, I'll follow you. Go ahead.
I mean, I was going to say, I think the most important thing for leaders, especially, but really anyone at any stage in your career, is to keep perspective and to maintain that, above all else. It's very hard when you're in the thick of it or in the minutia to stay above the fray, right? But it's critical. And we talk about that a lot when we're in like a consultative capacity, talking to leaders, especially when they're experiencing turnover. And we talk a lot about, you cannot let that trip you up. You cannot let something like turnover completely get you wound up or caught flat-footed, because the entity or the organization is larger than any one person, right? And so like you're going to experience turnover, you need to allow yourself just to go through that and to expect it and to manage through it. But not allowing yourself to get all wound up, I think is challenging, but is critical.
So my thought would be a little bit of a one-liner and then a point behind it. But one of my favorite expressions is leaders are people whose people don't know they're being led. And so in my firm, while I'm the founder and chairman, there are 6 partners and another 6 managing directors. And we actually have a consultant come twice a year and just sit with us for a planning day. And we were terrible at it, 12, 14 years ago when we were getting going at this. And today he'd say, you guys are like one of the best communicating groups of senior leaders I know. And to Shaby's point, it's the ability to have each other's back, to communicate, to kind of rally around somebody when they stumble and not, trample them because you think you're going to get ahead. And those are not always natural instincts. You really have to work to build a culture that leads an organization that develops those behavior traits. And then, the sum of the parts is much greater. The whole is greater than the sum of the parts, I guess the way to say that.
Maybe I'll go to a next question, which asks about communication among employees. This came from our audience. They're asking, what kind of tech stack or people using Slack, or generally during these times, how are employees at organizations talking amongst each other? Shaby, maybe I'd ask you, and then Carter, I'd be curious if you guys are doing anything over Union Square that we can learn from.
Sure. Yeah, definitely. I mean, the question is asking how has that changed organizational dynamics, right? Employees talking amongst themselves, not necessarily the top down or the groundswell bottom up. And what I think is really fascinating is what we're experiencing in Slack and Zoom and all of these, and like Teams chat, et cetera. It's essentially water cooler talk, right? It's the old school water cooler talk of people getting around some communal space, talking about anything, right? Talking about what happened over the weekend, talking about what new announcement leadership has just rolled out, talking about new initiatives, talking about something that happened in their program or whatever, or at the event. That always has existed, but what's happening now is this virtual platform has now just opened and expanded the conversation to allow for more voices. So the actual conversation itself, I don't think has changed, but there are more voices around the table, there are more perspectives around the table, and if anything, I think has made the conversation richer as a result.
Yeah, I think what I'd add to that is that we stumbled badly on that point when COVID first hit. So we hired, we're 40 people, we hired 6 college grads to work in this program on Wall Street that's called the Analyst Program. And one by one, they all left by the end of the year. And as we looked back on what had happened to us, it was kind of what Shaby was talking about. They never got the assimilation into the kind of team environment on working on things together that, they had when we were in the office. So while we were still closed from an office standpoint, we did, I think what Shaby was suggesting, we just started creating Zoom team environments, right? Where the teams would get together all along the way and have the same kind of conversations they were having in San Francisco or New York when we were in the office. And then we've taken the brave step, which I know a lot of companies are at different places on, of trying to get people back in the office. And our approach to it for people's reflection is to ask people to come in 2 days a week. And it's interesting, you know, people got right on it in New York and nobody showed up in San Francisco. So I won't comment on the Californian since I'm sitting in New York today, but we had to go back and and I'm from California originally, but we had to go back and figure out why were we getting different behaviors out of those, you know, two different geographical workforces. And now we've got it all kind of working pretty well.
I love that.
Everyone's out surfing. Very good. There is a question or sorry, Shaby, did you respond to that?
No, I was just saying I love that. That's great.
Okay. There is a question in the Q&A about launching a feasibility and or a campaign. Is this the right time to do it? Maybe Carter, I'll ask you to start because I know that, you know, Equine Green just went through one campaign and they're, you know, thinking about what's next. I'd be curious if you have any opinion whether what's happening in the economy should stop nonprofits from embarking on, you know, significant fundraising efforts.
Well, if you're in the process of making the decision, I definitely wouldn't let the economy bother you about it now for a couple of reasons. One is there's such huge momentum on people wanting to get involved in issues that you've just got a lot of focus going on, okay, the world's got a lot of things it's trying to deal with. How do I get involved? The second thing is by the time you get organized and launched it, if you believe anything I said earlier, we'll probably be in an environment where things are kind of pointing in the right direction and people's heads will be getting around the topic of, you know, contributing philanthropically in a more positive way. Once again, since it's the only thing I really know well in the Equine Green context, the ability to kind of move on to another area, we had heard a lot from donors in our first phase of the Racial Equity Fund that if we ever wanted to fund more directly, more mature fellows, they had another pool of capital to do that with. So part of it was just a little bit, is the expression demand pull, you know, where the market was saying to us, look, there's funding to do that if you choose to do so. And there are a lot of entities out there looking to participate in the world of social entrepreneurs that didn't have a good process by which to engage. So we're hoping that, you know, if we have this conversation again in 6 months, we'll see how we did. But we believe that there's a lot of interest in this, and we'll know by the end of the year if the airplane's off the ground and going in the right direction, which I believe it will be.
Or as Powell says, did the plane land softly?
Yeah.
So, Shaby, maybe I'll ask you the first question here that was posed to us. Do you have any advice for the are hiring right now in terms of how could they be most competitive as an employer?
Oh, sure. Yeah. In terms of like recruiting and looking for new talent, it's going to be hard to try to, you know, one route obviously is to try to increase your salary, but it's going to be hard to stay competitive in a sustainable way by just increasing salaries. And when we think about, you know, what the workforce is looking for, everybody's motivation for looking for something new is going to be different. Every person's motivation coming to your organization is going to be different. And so when we think about attracting talent, we break it up into a couple different categories and try to think about what is most important to that person. And then we try to figure out how to you know, maximize that for them, right? And it's not going to be the same for everybody. So some people may be squarely interested in pay. They might be squarely interested in compensation. Others may be benefits. Others may look for career development or progression or growth or advancement. Others still may look for work environment, work-life balance, right? That piece that we were talking about earlier about really having some stability. And then lastly, folks more than anything are looking for a culture that they can assimilate into, fit into, and enhance with their own, you know, their own perspective. And so I think it's really important to understand money's not everything. It's important, but it's not everything. And in order to know what's going to be motivating or attracting to the people or attractive to the people that are in your candidate pool is to talk to them about it, right? Have open, honest, candid conversations in your interviews about what they're looking for. Why did they apply? Why did they submit their materials? Why is this interesting to them? What do they want to do next? And I think that is the way to win the talent war at this moment, is to listen and to ask.
Thanks, Shaby. We had two real good questions. Carter, one specifically to you, as I know that you work at Echoing Green, others, you've had some interaction with some mega donors. So do you think, or rather, what impact do you think that these mega donors have had on philanthropy? Do you think that it would be continue? And if you have any insights on the giving pledge and the impact that that group has had on philanthropy?
Okay, so look, I think in the Echoing Green context, there are a lot of corporations and foundations that have never supported our work that are not involved. And I think the 33 years that Echoing Green was in existence before George Floyd's murder were a great and quite long training camp to be ready for the moment when the world turned to supporting people doing this kind of work in the field. By that I mean young social entrepreneurs who have a great idea to make the world a better place. And the corporate involvement was quite widespread. So all the big banks, some of the big retailers, some media companies, but the common thread was people who thought this was a moment to get more focused on this question and this problem. And this is a little off point, but when Shaby was talking earlier, it occurred to me, one of the things I think we did really well was set out, as we raised this fund, said, look, this is to scale our work over the next 3 years. And we were very clear on the metrics we were going to use to scale that work from what we had been doing historically in terms of quantity of fellows and other forms of outreach. And we've met or exceed all those metrics. And our donors recognize it and respond to it. And so as we get into year 3, I think that's going to redound to our benefit as we ask them to, extend their commitment to us. I'm not at all qualified to answer the donor pledge. I know just enough to be hugely dangerous and say something that isn't correct. So I will duck that one.
No problem. I love it. So here's an interesting question that talks about inflation again. So organizations have had higher costs. COLA is going up, right? Higher salaries, higher overhead, higher program costs, everything, right? Like that is what inflation is. Do you have any recommendations on how to talk to donors about that? Like, how do you explain that to someone? It's like, well, we actually asked for a little bit more because all of our costs and, all of our program costs, everything have gone up. How would you sit down and chat with a donor about that?
Well, so a point I didn't make earlier that I probably should have made was that if you look at where the markets are trading today, in terms of everybody, fretting over the collapse of the stock market, it's trading almost exactly on the average of where it's been the last decade. So equity prices haven't collapsed to something we've never seen before. And I think part of my belief that this is not going to be a crisis, it's going to be a correction, is that I think those prices, those values have held up pretty well. If you take that point, the donor community, if they look at it that way, I don't think is suffering in terms of returns on their assets. It's off from its high, certainly, but it's certainly at a sustainable valuation, which puts them in a position to at least be receptive to hearing the argument you just made, right? Which is, come on, we're dealing with costs 8-9% higher than they were a year ago. It costs us that much to do it. Quite frankly, it costs us more to generate the impact we've been generating because the things we're doing in the market in many cases cost more. I don't think that's they may not change the amount they're donating, but they certainly can't reject the thesis, right? Happens to be accurate.
Fair. There's one other question, which Shaby will direct towards you, and then we'll try to get everyone out here a little bit early. Hopefully, maybe get some lunch or something like that. So, Shaby, it's a good question that was posed about benefit packages or benefits that we're offering to employees that we're trying to attract. What about the employee that's been there for a few years and where what you've offered to that new employee or to attract them wasn't offered to them? How do you deal with that issue?
Sorry, I think I'm
Shaby.
on mute. Sorry about that. So rookie mistake. Okay, so as we are developing packages for new hires that come on board or thinking about retaining the folks that we do have, something that needs to be top of mind for all organizations, for all leaders of these organizations, is maintaining equity across the board. And the way to do that is by having consistent application of different levers or different, methods to by which to go about this. So that might be the benefits that you offer. It might be having formulas. So the formulas might be tied to things like tenure. It might be tied to level. It might be tied to responsibility or output. But making sure that whatever formula is established, that you're able to consistently apply that across the board and stick with it. This might sound counterintuitive, but candidates that are coming into your organization actually want to know and would respect if you were just honest with them and said, we have these equity standards in line and here's what I can offer you. I can't go outside of that because it wouldn't be fair to everyone else, right? And if you're able to have that very transparent and open conversation, it says a lot more. There's a lot of depth in that. It says a lot more about your ethos and how you run your organization than anything else, than just giving them whatever it is that they're asking for. So it's important to maintain some standards, some formulas that you're going to stick with, and stick with it, right? Do the thing that you said you were going to do. So if it's, we have these formulas based off of tenure, it's really important to us. We have these formulas based off of level or level of responsibility or ownership, et cetera. Do whatever that is, but make it equitable across the board. You can offer different things to different people, but it needs to make sense.
I like it. Thank you. Final question for you both. Anything else that we didn't touch on that you'd like to touch on, or any other final pearls of wisdom?
Gosh, I don't know. How do you go first?
Well, all I would say is all of you on this call are doing God's work and the world needs you more than ever. And I think you're in an environment where the world is trying to figure out how to support what they want to support in a more aggressive and stronger way than they have historically, because they realize the urgency of the moment. So, stay in the batter's box.
Stay in the batter's box. All right. Shaby?
I love that. There's no topping that. So I just say ditto, and this has been really fun. I've been glad to be a part of it.
Yeah. Thank
you.
Thank everybody for the questions. Shaby, Carter, thank you. Thank you both for the time and the insights. Really helpful. And this recording will be online. And thank you everyone for joining. Have a good day.
Thanks.
All right. Take care.
Bye.